Hey everyone, Jonathan Rose here. Hope everybody's great. Really excited for 2018. One of the most powerful things option traders can learn how to do is to learn about SKEW. SKEW, S-K-E-W. SKEW is how the options market prices an underlying stock, and you can get a really good feel as far as direction. So in front of you, Watt. Watt's in play right now. Watt just got FCC approval on a really exciting new product. And what the product does, it allows you to charge devices using radio frequency. Very, very cool. But I'm a big believer when stocks start moving this fast. It went from 10 all the way up to 33, last trade 23. Nobody really knows where to value it. But what you can do is you can learn a lot by how the options are pricing a given name. So if I go over here and we look at the options chain, this is what I want to show you. Last trade 23. Now if you go $7 higher, you're going to see the calls, $1 bid at $1.10. Now if you go $7 lower, you're going to see the puts 50 cents. So the calls are twice the price of the puts. Okay? So there's really not much downside skew. And the reason there's not much downside skew is because Watt was trading 10. It got FCC approval for their device. So the market is saying, well, it's probably not going to go back down there. That doesn't make much sense. But if you look at the upside, look at the possibilities of the move. So Watt, the market is skewing this name to go higher. So if you're long Watt, there's a higher percentage of it going higher than going lower, and you can see that definitively through the options market. Now, what kind of trades can you place? Well, options market makers are no dummy. Pat myself on the back. I was one for 5 years. They're not going to let you sell the downside puts, right? They're not going to let you do easy put credit spreads because there's just not enough premium in them, right? Sure, you could sell the 15s. You're probably going to make money, but you sell 10, you're going to make $400. You're going to have too much risk. The upside, people want to buy these because it's exciting new technology. Market makers are making these very, very expensive because they're going to make you pay for the luxury to leverage yourself and buy stock up at 35. Right now with Watt, this video is not about a trade idea or a trade recommendation or anything like that. It's about education. It's about learning the stocks that you trade and learning to be able to read into the options market and to figure out how these things are priced. There's not a great trade because the upside's too expensive and the downside's too inexpensive. Now, if someone said, Jonathan, great, glad you said that. I need you to come up with a trade idea. What I would want to do, consider maybe you want to buy downside puts. At the same time you buy those downside puts, you want to buy the underlying stock. Because if you buy downside puts and Watt gets crushed, maybe the FCC comes out and says, whoopsie daisy, we didn't mean to approve you, and it goes back down to 8, the 15s will pay off, right? It'll cover you on the downside. If you buy stock also and Watt goes up to 40, you're going to get paid on your long stock and those puts are going to be worthless. If you buy the downside puts and buy stock, what you're really doing is you're synthetically buying a call. And you can do that in a name like Watt because the downside puts are so much cheaper than the upside call. Again, I don't really like any trades in Watt. I just wanted to use this as an example because it's a really, really nice display of how the market is predicting movement of a given underlying name. That's what I got for you. Any questions, guys? Email me, support@activedaytrader. Happy to help. Thanks.